People believe the market moves left to right, and over time it does, but the most important data actually moves up and down. The most important variable in trading is price. If you look at an order book, price moves up and down. So what that means is that price levels are extremely important. When you understand how to find trading levels, you can then begin to trade from key entry points. You may have never heard of key entry points, but a key entry point is just a place on a price chart that's going to give you the highest chance of having success with your trade. So understanding price levels and key entry points is vital to pro trading. Traders who are waiting for their setup, they are waiting for price to make it to their trading level. Believe me when I say this is a game changer. So watch this video to the end if you want to level up. See what I did right there? Hey, listen, how's your prop firm journey going? If it's been a struggle, I do have a free guide called Finally Funded that has been helping many struggling traders finally get over the hump and pass their prop firm challenge by just giving some basic, simple pro tips, all right, about risk management, just small tips that can make a difference. All right. So if you've been struggling, just comment below, give me the guide, and I will send you Finally Funded. In today's lesson, we're going to talk about price levels and how you can use them to find key entry points so you can enter at the best possible area on a price chart to begin to increase on the sudden. Let's go deeper. All right, boys and girls, school is in session. All right, so to teach you guys this lesson about levels and key entry points, and I'm going to get into my range fade. All right, it's range fade summer. But before I go into that, I got to build you up to the understanding so that you will have confidence when it comes time to take the trade at the top of the range or at the bottom of the range to fade it. This is going to help you have confidence, and it's going to help you. And I'm going to show you how to actually find the range. People keep asking me how I find my levels. Here you go. Let's dig in. Now, I do not trade order flow. All right. I do not trade order book here, but I need to use this to teach. Okay. This is for teaching. All right. I know everybody want to watch my videos and think they can start trading from watching one video. That's another discussion for another time. But understand, I'm not saying to trade the order book. I'm not saying to trade order flow. I'm using this to teach you guys. But the reason why you don't want to use this is because you think that I'm going to teach that. That's another video. Okay. You guys see these levels, right? Each price is a level, but I need to teach you some basics. Okay. So the market moves like this. The order matching mechanism moves like this. Every market order, okay, which is considered to be aggressive, every aggressive market order is paired with a passive limit order. Okay, that's how the order book works. All right, so if I hit the buy market book button, they're going to pair me with a limit order, so a sale limit, because I hit the buy market, so they're going to pair me with the nearest sale limit to make that order happen, to make that trade happen, to make that transaction take place. All right. This is important to know. Now, limit orders do not move the market. All right. Limit orders, buy or sell, is just liquidity, and it's hanging around up here. Right. Some sale limit orders are up at the top. We're going to call this supply. All right. And then you're going to have your buy limit orders is down here. That's your demand. All right. All of this equals liquidity. All right. This is how a market becomes liquid. It's through, oops, I'm messing all up. The market becomes liquid that way. All right. So we got a whole bunch of buy orders down here, a whole bunch of sale limit orders up here. Every time a market order comes in, they pair it with the nearest limit orders. There's other limit orders that's closer, around in this area, right? So that's how the order book works. That's how the order flow mechanism works. All right. Especially in futures. And we can see it right through here. So I'm just saying every price here matters. Every price is a level. Okay. okay? And so this is what happens. Market orders come in, prices start pushing. Let's say we push the market down, but eventually it's going to come down here where these sellers can no longer push down because there's just too many buy limits sitting here. The same thing happens if we was going up. Eventually the buyers are going to run out of gas because there's just too many sale limits sitting up here. All right. And it pushes prices down. Do you see now how you can range? Because if prices never can if the opposite side can't overflow all the buy limits or all the sell limits, you end up ranging and staying in what they call a fair value area. All right. This fair price is right through here. So when we're ranging, what we're saying is all the market participants are saying the price of the S&P 500 is fair at 58.97, but it's a little expensive up here at 59.02, and it's a little too cheap down here at 58.93. All right. I know all that looked really messy. All right. But what's the key to understand? Every aggressive market order is paired with a passive limit order. All right. That's the key. And then we know demand is down here as liquid, as supply, as liquidity. Sale limits are up here as supply, as liquidity. And many times the market is going to bounce in between these levels. So if you can identify where there's a whole bunch of orders sitting, all right, this is why people do like the order book and order flow, because if you can identify where a whole bunch of orders are sitting, then you kind of know which side may reverse the market. You know, you can know the market may come up here, but then reverse. All right. But remember, every aggressive market order pairs with a passive limit order. And the problem is, the reason why you don't use the order flow book or order book on its own is because you can't see all the market orders, all right? Because you can't account for the dark pool orders, the OTC orders. Those are all market orders that don't show up here until they're triggered. So you don't want to use the super dom to trade from, or you don't want to use order flow to trade from, because you actually don't have all the information like you think you may have, because you can't account for those market orders. But to move the market, you see, basically this number here, if we want to go up, these numbers, these orders here have to be able to absorb all the orders here with market orders to get us up to the next level, right? Remember, the market really moving in levels. So for the market to move, enough market orders have to come in to overtake all the limit orders that's sitting here and keep pushing up, and more buyers have to come in for the market to keep pushing up. Same thing going down this little column here. You would have to have more sell orders than buy orders, which would move the market down, and then those other aggressive market orders will come in and keep moving the market down. All right, so that's how order flow helps us understand. I just want you to understand the levels. These levels mean something. Okay, now how do you find the level? All right, let's get into that. Pretty simple. Let's say you got this day right here. Just find the swing highs. This is the high through here. Through here was a high. Down here was the low of this day, of this session, of this time period, however you're looking at it. That's your range. Now let's see what happens when I just draw a range off of that. See if we could get any trade. You only need one trade a day, right? So let's just see if because this is early. This is 8:08. You could have drew this at, this top happened at probably 4 a.m. This bottom happened at 8. So you could have had this drawn before the market even opened. All right. And bang. You really only had one opportunity to go right here. We didn't make it to the top, but after you get this high, lower high, that's your fade right there. And it's currently dropping, all right? That's it, it's that simple. If you just find the high, the low, box that up, you probably can find a range, all right? And then you just play range rules. When you get to the bottom, you go long. When you get to the top, you go short, and you wait. This is your key entry point. This is the level. So what are we saying by range fade trading? What we're saying is that because prices couldn't get no higher, look how it stopped here, it stopped here, it stopped here. There must be a ton of supply right here. Got to be a ton of supply a ton of sale limits sitting here. Then here, we tried to go lower, stopped right there, ain't even came back and sniff it. There has to be a bunch of buy limit orders sitting down here, whole bunch of demand. That's why range fade trading is so powerful. Whole bunch of demand sitting here. So as long as we stay in between this price, and I can just look at the price, let's just say 59, as long as we stay between 59.25 and 58.75, I know this area all through here is fair value, right? The market is fair. Everybody in the market says, hey, in these prices is pretty fair. So it's going to keep bouncing like that until it gets to the top and probably bounce down, probably bounce up. That's range fade trading, people. That's range fade trade. That's range fade trading. And you just box this up and wait for your touch. Wait for your trade to come. That's it. And you can do this on a small scale, large scale. Here's just a little small range. Well, let me find another one. Let's see. Yeah, this day was just wacky. That was crazy. That was madness there. You kind of can do the same thing here. Here was a bottom. Here was the top. Let's just drag it over. And you would have been stuck here. And then you get this baby breakout. Pull back entry. That one sucked because it didn't work. Came back up. Let's just put it on, keep going over. But if you stick with it, when it breaks out here, 2 legs back, oh, right there, beautiful entry, bang, all right? So what happened here is the beauty of the range is once you do get a break, you just take a breakout pullback trade, right? So if the range fade doesn't trigger, once we break out, then you go with the new trend. Let's go back some more so we can find another one. We was trucking this day. Now here's another way you can find a range. Find a trend first, all right? So let's say we find this trend first, man, we trucking. Then when it makes this high, then you look for a low, then you box that up. So you can find it off of the finish of a trend. You can find one off the finish of a trend. Bam, right there. When it came to the top again, right there. Here was your entry, boom. Came to the bottom, broke out, failed. Here was your entry. Boom. That's 2 wins right there. 2 wins right there. Now, somebody in the comments told me that you cannot find a range in a live market. To that trader, hey, get another hobby. There's other things that you could be doing. If you can't find a range in a live market, all you got to do is find a swing, box it up, wait for a touch. Understand that the market moves in levels. Understand that the market moves in levels. After you find a swing high, swing low, box it up, right? Understand that, hey, at the top, it's a whole bunch of sell limits. At the bottom, it's a whole bunch of buy limits, all right? And once prices get up there, you're gonna find a rejection, and you should be able to see it, right? When you get up there, you could be trucking. Say you was going long. It could be trucking, and hit that level. If you see a big red candle come down, that's not by accident, right? By understanding how the order mechanism works, by understanding how order flow works, by understanding how liquidity works, by understanding about buy limits, sell limits, buy market, sell market orders, you understand that, oh, we're just in a fair value area, and we're going to stay in this area until the market participants get more data and say something should change. Either we're going to start trending up or we're going to start trending down. Until then, I play the range fade. Once the range is broken, I take a breakout pull back to get in at the beginning of the trend. I'm trying to tell you people, trading levels like this is where it's at, okay? You're going to take less trades. The range fade is going to give you a high probability setup, right? You're going to start waiting for trades to come, which is going to keep you from over trading. All right. Your win rate is going to go up, which is going to stop you from revenge trading. All right. I'm trying to tell you guys, I'm giving you something that is so simple with the range, but it's like every beginning trader, this is where you really need to start. Start by just mastering and understanding range trading, and then everything else is just going to become easier. But if you can focus on this, first of all, it's going to get you to the winner circle a lot faster. It's going to cut down a lot of the stuff that other traders go through. And man, all you need to do is be able to draw you can draw a horizontal line. So hey, if you made it out of 4th, 5th, or 6th grade, you should be good. All right, with this. So hey, just find the swing high, swing low, and do some studying about the order flow mechanism or order matching mechanism to understand how the market works. See, when you understand how the market works, then stuff that, you know, people want to make this market mystical. It ain't mystical. You guys see in the order book, aggressive market orders are paired with passive limit orders, and that's it. The market is not mystical. For those of you who getting stopped out to the tick all the time, and you think that your broker is targeting you, or you think that you just have horrible bad luck, or you think that you were stop loss hunted, let me explain to you why you keep getting stopped out to the tick. All right, people. One lab, we're gonna finish up with this. And hey, if you need help passing your prop firm challenge, hey, I'm telling you, comment below, give me the guide, and I'm gonna send you Finally Funded, the guide that's been helping people pass their prop firm challenge. All right, so we're gonna finish up with this. If you've been getting stopped out to the tick consistently, here's why. Let's say you enter right here at 59.06, all right, and you get up to 59.07. And you like, man, I just don't want to take a loss. I'm just going to lock in a tick. You know, you think you safe because it's moving and everything. But as soon as you lock in at 59.0625, okay, you just put a limit order in. Your stop market order is actually a limit order. So you have your stop is a limit order. So you got a passive order in the market. So you just moved a passive order closer to the current price. By doing that, the next person who puts in an aggressive market order is going to be paired with the nearest limit order, which is the stop that you just put too close to the price. All right. You're not being stop loss hunted. You're not being cheated by the broker. And you don't have bad luck. You don't understand how the order mechanism works. You're putting your stop, which is a limit order, too close to aggressive market orders. They come back, they fill the order because you put it too close. If you just stay back, you will win a lot more. This is why when you stay back, you win a lot more. Okay. I hope that really helps somebody, because I know somebody's been thinking, I know somebody's out there been feeling like they've been getting cheated by their broker. I know somebody out there been feeling like they got horrible, terrible luck. I know somebody out there been feeling like they get stop loss hunted all the time. It's simply because you don't understand how the market works. You're putting a limit order too close to current price. And as soon as an aggressive market order comes in, they're going to marry it. They're going to marry that order, and you're going to get stopped out to the tick and be wondering why. All right. So I hope that one really helped you. That's a tip of the month right there. That's going to really change the game for somebody. Stay back. Keep your stop where it goes until you're ready to take some profit. All right. And it'll really change the game for you. So if you've been struggling to pass your prop firm challenge, I have a free guide that's going to help you. Don't the free guide help people tighten? It's going to help you. It's called Finally Funded. So just comment below, give me the guide, and I'm going to send that right over to you. All right. So until next time, I hope you guys enjoyed this. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye. Hey guys, JD here. So we are nearing a key entry point. 59.35 is basically where we're trying to get, 4 points away. So we will see what happens when we get here. I mean, if we can get here quickly, we'd be a long way away from 21 EMA. The range fade would look pretty enticing if we can hurry up and push up and hit this key entry point. So we're here, and that was nice. We're a mile away from 21 EMA. See the rejection as soon as we get there.
Order submitted.
Let's see what happens. Now, like, what's the chances that we just pause right at this key entry point? You know, what's the chances that it stem like that? You know, I'm just saying, what's the chances that I just had this line pre-drawn, we get here, we see the rejection, not a lot, but this was some strong buy pressure, and then it's like they just hit a wall, right? Bah! Hit a wall of sell limits. We're gonna see if there's enough market participants to keep this thing trucking for a breakout pullback, or is there enough supply here to stop the momentum and then turn us? Only time will tell on that one. Got a breakout situation. All right, this is clear. We've broken out nicely, aggressively. Strong candle. See EMA pointing up. Look at the arc on this EMA. This is a pretty strong uptrend. We're still a long way back away from the 21 EMA. I mean, this was a breakout, but if we pull back in this range, I'll still go short. So we had this breakout. It never pulled back. It just kept trucking. So I waited for a pullback here. I got in super late. We're gonna see if I can steal one here. I need 2 points just to get out of risk here. 2 points from right here and I'm out of risk. This is just going with trend after a breakout. Keep trucking, keep trucking. That's what I'm talking about. Closing your top, closing your top, closing your top, closing your top. See what this boy give us. Oh, that's what I'm talking about. That's what I'm talking about right there. Good win. Push up, closing your top, closing your top. Okay, that makes sense. Close on your top, close on your top.
Stop filled.
Oh, I couldn't turn the currency back on in time. Good trade. Good trade. Let's see.
Easy money.